Greetings, greetings, greetings. You are now tuned into the Vault. Trust Christian own, nothing control everything. Just want to thank you for tuning in live, listening to replay. Always appreciate everybody that tunes in live, listens in the replay. This is the Vault, episode 459. We've been up there, so got quite a few years in, quite a few episodes in. Some episodes have been taken down, so it's not completely 400 and completely 459 deep, but you can go back and listen to in the archives. Many of the episodes on the Vault, the YouTube channel here. Always appreciate you for tuning in live, listening to replay. Feel free to hit the like or subscribe button if you haven't subscribed yet. Always appreciate the supporters throughout the years. We've been building over years now, and always thank everybody for tuning in live, listening to replay. So, this is the Vault, episode 459. What recession? This episode is really for a lot of the people that are looking at these type of things in the public and they pretty much haven't identified it yet. And slowdowns happen in economies. This almost could be more like a market update because there's so much that is stated in the public that there's supposed to be a recession. If the United States has not gone into a recession, then the UK, who will be under so much more pressure right now because there's a war going on in Europe or in Eurasia, in of the Asian continent, Eurasia, Europe in general, then what would be the issue? Why haven't we seen those effects yet? And so we're going to talk about that in this episode. It's very important to talk about these things when people say, "Oh, they're saying doom and gloom. They're saying the news is saying this, the news is saying that." Well, we're here to say that the news can say whatever it wants. Their theme will change very quickly because the most news stations are owned by a few owners, anyways. So the news is pretty much the same across many platforms because they're owned by the same companies. For the most part, it's only a handful of companies that own big media. So when we talk about that narrative, the recession, of course, that narrative is going to change as we progressively get into this year and you start seeing that demand is still really high. Demand has been high for 2 years now. Even for technological products, when you look at Apple and iPhone, so this is definitely not financial advice, not legal advice. We're not giving any endorsements to any companies, but we're going to have a general conversation. So, once again, when you look at a company such as Apple, they were damn near giving their cell phones away. In recent years, it's almost like this cell phone is now $1,000 for novelty's sake. I mean, are they coming out with a better camera? Are they coming out with a better this? Are they coming out with a better that? And then it's almost like a new car. You got to get a new cell phone, what, every year or every other year, like a new car. So that theme has kind of fell back. Are people willing to spend $1,000? Are they willing to trade in their old phone just to spend an extra $500 and be locked into a contract? These are things that people talk about when they talk about these type of technological devices. But so here's the deal: they say, oh, there's if there's a recession, it's a recession with these tech companies. That's just the bottom line. They've lost $1 trillion in market value because these tech companies had cheap money. No doubt about it. Maybe the books were inflated with cheap money for a long time now. As you can see, the tech companies weren't that stupid. They said, yeah, you caught us, government. We were charging people large monies, large prices, and our technology hasn't really improved a lot. So, as you can see, they were charging prices, $1,000 for a cell phone. I mean, when you think about that, cell phones actually didn't always cost $1,000. They were actually cheaper at one point, and they were expensive for it to be a $500, $700 cell phone. $1,000, $1,200 cell phone. That's something now that people are saying. If it's a recession, it's for a cell phone that cost $1,000. So we're gonna say that okay, this technological company they've fallen back in earnings. I think even when you look at recently at Tesla's earnings, Tesla was flat for the most part. They're probably not going to perform major this year. They're saying there's a slowdown in demand for EV. When you think about EV, a lot of people haven't addressed a lot of the issues with this EV situation. Bottom line, because they need more chargers across the country. It's like, okay, I have the microwaves, but I don't have enough sockets. That's the issue they're running into already. Is we don't have enough sockets in certain locations. And Tesla is just a car company. They're not making just the pods for you to charge your port, charge it up, and that does cost money. So there are third-party companies that provide charging. So let's continue. When you say, "Oh, the tech sector," there were a lot of tech companies. We were thinking about doing even an episode where, at this point, ladies and gentlemen, you've already seen $2 billion companies, literally, maybe more than a billion for sure, holding assets under management, supposedly on their books, valuation per the banks, and these companies are filing bankruptcy, going under, basically creating theft over the internet. These companies, whether they were propped up through institutional money to say, hey, we have institutional backing, so we're going to now, one of these companies, we think they had even their name on a, what was that? They had their name on the side of a sports arena. That's how wild it is. One of these companies had their name on the side of a sport arena. So think about that. In your lifetime, I mean, if you're a born red-blooded American and you say, "Oh yeah, I want to make something of myself. I want to do something great." Next thing you know, in your lifetime, you see companies that will go from zero within a matter of 5 to 10 years to $1 billion company, and they're filing for bankruptcy. Do you have an honest chance at that in your lifetime? Because that is what America provides. It provides that you can do that. Not to say it's good, not to say that their theft was good, but to go from zero to $1 billion valuation, and literally these companies are almost wiped off the face of the planet right now. These guys, if you knew these two companies that we could talk about, and this is literally within the past 6 months. So there are many, companies that have lost half of, say they were $100 billion company, now they're a $50 billion company. Say you were a $20 billion company, now they're almost flat. Less than a 10 billion, less than a $7 billion company, and these are companies that you say, oh wow, you think about that. If you had $40 billion at the beginning of, let's just say this, you had $40 billion 2020, 2021. Somehow in less than a year, you're down to less than 10. Now when people say, oh, that's how you know it's an indicator of something bigger. Not, oh, it's a recession. We've seen GDP numbers come in for what could have been considered one of the worst fourth quarters in the past 3 years. Worst fourth quarters. And it was not. If it was the worst fourth quarter, it was literally the worst fourth quarter. And it still was not flat. Maybe it was 2% growth plus. Is it a slowdown in growth? We could say that. Is it a slowdown in negative growth? No. Oh, we're seeing numbers correlate close to that. We see it right now. Oh, there is this air of energy of, hey, oh, there is this sentiment that maybe there's a soft landing. And what's sad is when you look at the Fed, and the Fed is. Someone asked the other day, do you think the Fed is tied, or do you think the market is tied to the economy, because they're two separate things? The Fed is definitely not the economy. And if the Fed was the market, you keep the hammer on until you quelch the inflation. But instead, It sounds like we've seen maybe enough numbers, maybe, and they've seen enough numbers and sentiment. When you look at the way the market has been moving, sentiment says maybe they're having a soft landing. Maybe they're slowing it down so it'll get to their target rate, and they'll be in a position where the basis point hike that they'll do, they'll stretch it out over a period of time if they need to continue to raise the rates, the cost of money, the cost of goods. You say, oh, the companies raised the prices. They did. And guess what? The Fed, they're taxing the companies for using the money. Oh, you guys want to charge and make more money? Then we'll charge you all for having more money. Well, there were companies that were making money, and then there were companies that weren't making money. There were companies that were making more money than what they had on their books, significantly. Debt to income ratios. What was a tech company's debt to income ratio? Oh, the company's worth $40 billion, but they only made $20 million in revenue, in profit. Hold on, let's say that again. $40 billion market cap, $20 million revenue. That's what you were hearing come out of the tech sector. Oh wow, these guys were barely coming at $20 million a year, but the company was valued at $1 billion per the banks, per the street. That's what you saw, and you're seeing these reevaluations go on right now. And you say, oh well, let's go over to supposedly EM. These go into these emerging markets. Well, how is there going to be a recession in the States when the emerging markets are going to even have a conversation? Emerging markets are predicated off Americans, large consumer base, and Chinese, large consumer base buying emerging market products, and other parts, developed parts of the world, buying these emerging markets. You see over in the UK, they're doing they're in stronger hikes right now for the cost of their money because their money went on a tear. They thought that they were excited that their money, oh, well, the UK money, it still costs more than a dollar, right? Right. Okay. Well, that can change at any moment because Brexit has happened now. And there's also a war going on. There's a war going on in what you call Asia or Europe, and for that reason, cost of goods have changed because one of their largest suppliers is at war. And so the other companies have damn near put embargoes on this country and tariffs and, you know, commodity taxes and things of that nature from that country. So as you can see, what recession? Oh, is that going to hit America? You don't see Americans really talking about that. That comes on TV occasionally. Those are on your political news stations. Those aren't on your everyday news stations. Your everyday news stations, people are dealing with a lot of more local issues. So here's what is going on macro and the bigger economy. The Fed, the Gov, has said there's a strong labor market. By being a strong labor market, that means people are buying things. They may not be splurging, but they're buying things. So it's holding this artificial inflation up. Well, we've just seen one of the largest tech layoffs happen since either 2018, not necessarily 2008, or it was a whole reshuffling. A dot-com bubble just bust after 20 years. So what continues to happen in big tech will continue to happen in big tech. Big players will gobble up small players. Small players will fall by the wayside because they don't have billions of dollars. Google's not going anywhere. Apple's not going anywhere. Well, it seems like some of these companies once again, it makes you wonder, can they go somewhere? Wish they will at one point. But it makes you wonder, how soon can they go somewhere where you've seen billion-dollar companies already be wiped off the face of the earth in less than 10 years? So what makes you think a 20-year-old billion-dollar company can't get knocked off? Are they getting out competed? Maybe. But what we see, a lot of people are talking about the real estate. So we're going to jump into the real estate. Oh, First of all, the real estate recession. You got to think about this, ladies and gentlemen. For the most part, even 2020, 2021, real estate prices were pretty much at the highest they've been. They were selling at a height. Okay, are we at a fire sale right now? Are people buying assets at deep discounted prices? No. You would see what we do see: slower buyers, slower sellers. Just a little bit slower. The interest rates are higher. They're 2% higher. Money costs more. But there's still intelligent investors in the market. That's why you see the money. That's why you see the market the way you see it right now. You don't see the market tanking. If it's a recession, why isn't the market tanking? Because the market's not correlated to what they call the economy. It's not. Those are two different things. So let's hop back to what could be a earnings recession. They keep saying it's an earnings recession. How's it going to be an earnings recession? Cost affect revenue. What did they cut? Tech cut employees. If we were making 23 million, we're now going to keep more of that. We were at 40 billion. So what? We've lost the $20 billion valuation. We're still over $1 billion. That's how they look at it. They're still $1 billion company, and they just cut half their staff, tech and all. Now you think about it. These are tech companies. They were supposed to be most efficient. But what happened? It seemed like they got bureaucratic. And guess what? They're not too bureaucratic to cut fat. And that's what they did. They cut the fat. They cut employees, benefits packages, food stipends, clothing stipends, housing allowances. You don't have to go home. You can stay here. We have a 24-hour maid and cleaning service. We have a 24-hour gym. We have food. We have a cafeteria. You don't have to go home. Just stay here and work a little bit. That was the philosophy, right? And then they cut that. Now we want everybody back at the office. Let's see how productivity increases. So traditionally, Americans are strong in those moments. They don't necessarily go into what we call, I would say, or what we would say is a recession. Americans are working. They have a strong labor market in the middle class for sure. But they want it, that's actually what the Fed wants to see. They want the middle class to shrink because when you think about it, people that have tech jobs are usually degreed, they're educated, quote unquote. These people are making over 60, 80K a year. These are your higher upper income earners, maybe 100K, maybe 200K from a tech job. Did they just lose their job? So we actually talked to some tech people in the sector. Tech people in the sector pretty much said those were salespeople. Those weren't necessarily just the hard workers that were actually doing code and program and actually creating things for, software for the company, creating, we don't know these tech words, but they got all these different terms inside of it. So you see that. We see a rotation going on. That's right. But we don't see a recession. Recession, you got to know what it is. Most people say, oh, well, we had one, or it was one, or we're in one, but it's not on the numbers. Well, that's how you know they're living in fear. That's how you know they're not making any money. Why? Because at the end of the day, you can't, you at least got to go off the numbers. We can only go off the numbers in some respects because the numbers and the data are the facts. That's the unfortunate part. If you're following an investing philosophy, if you're following an investing a thought process or guru that says, hey, the market's scary right now. They've been calling for a recession for 6 months, literally. It's like, what are you doing? We didn't call for that at the vault. It's been a recession. We've been thinking about a recession. It's been almost been a recession for 6 months now. For 6 months. For a year, right? Hold on. Well, we're not going to see it on the first half. The second half, things going to light up. Ladies and gentlemen, you know how they say follow the money? Well, what are the big banks saying? Oh, the big banks are up and down right now on this. Exactly. And they're supposed to be the big money backing these situations. They're supposed to have a good sentiment on the market. Well, real estate is slowed down. But when you go look at the numbers for real estate on home purchases, that's the good indicator to look at. When you're looking at home purchase indicators, they've just moderated. So, okay, ladies and gentlemen, first of all, when you think about the real estate market, I mean, was the real estate market growing at least 5% plus every single year? I mean, you think about it, 3 years in a row, that's 15%. That's quite a bit on a portfolio, period. On an asset appreciating, because it's like, well, okay, if you go 5 years, you're 20%. You keep going, it's just gonna keep going. No, things slow down. The market hasn't gone flat, it just slowed down. The market has slowed down. Okay, what are we seeing? The what, you know how you get drunk and then after you're drunk you get a hangover. So we're seeing the hangover of PPP. We're seeing the hangover of these companies, large companies taking funds from the gov to say we're going to keep our employees. We're seeing the hangover, whether the tech companies took that money or whether it was everyday mom and pop companies that took that money. We're seeing the hangover. But once again, the gov said it's a tight labor market. It's a strong, robust labor market. When you go look at the fourth quarter for Christmas, when you go look at the fourth quarter for these companies right now, you know, Apple's going to report here, ladies and gentlemen. Apple's going to report, and when they're flat, what are you going to say? Well, if you don't know that China was one of their largest consumer bases and their market was shut down, so chips were challenging to get. One, two, their sales took a hit. Three, I mean, there's factors that were working against this company. It's an American company. They definitely were selling cell phones or whatever tech product, and they couldn't sell into a market because their market was closed down. So, as you can see, of course, there's going to be a flat to possible negative numbers report. But okay, what happens when that market opens back up now? When that market opens back up for these American companies and they're selling back into foreign jurisdictions again. Are we okay? We don't see 2020 levels. If we see 2019 levels, even if we don't see 2019 levels, there's a lot of people that wish they sold everything that they could have sold in 2018 if they could have known about 2020. And if you're in the chat, if you're listening live, if you think about that right now, if you have assets and you had assets in 2018 that had a great price, you could have sold at that price. If you could have sold that asset in 2018, where now maybe 4 or 5 years later, 4 years later, 5 years later going on, the asset, is it cheaper? Is it flat? Can you sell off at the same price that you could have sold off in 2018? If you could you please type into the chat that you have an asset that's still great, it still grew, it's still appreciated, or you wish you would have sold off in 2018. If you wish you would have sold off an asset in 2018, please feel free to type that into the chat right now. Because we know people that are sitting on assets right now that definitely wish they sold off the assets in 2018. And that's where we are. Are you in a position right now where you still have assets? Is it going to get worse? Oh, think about it. There's doom and gloom around real estate. Oh, the real estate market is going to get worse. There's supposed to be a recession, right? Right? This is the sentiment. January, going into February, right? This is the sentiment. Oh, where the recession? It's supposed to be a recession, whatever they're saying. On the internet, wherever. Your news sources, wherever. You got Robert Kiyosaki, no disrespect to him. He's been calling for a recession for 10 years. And then COVID hits. And then it's like, oh, everybody gets their jolly off. The market went down for 2 months, 3 months. And then it went on a tear. Oh, we saw a correction. Yeah, it was a lot of artificial money. It was worse than quantitative easing. They gave out non-recourse loans. This is what you saw. I mean, they gave the common man a check. They didn't just give businesses checks. They gave common men check. Of course, well, where'd the money come from? Trust, Christian, and Vault. If you say, well, money was printed out of nowhere, you're right. Money was printed out of nowhere. So since money was printed out of nowhere, we got to get rid of the money That was coming out of nowhere. We got to have labor actually produce something for the dollars to be printed for a purpose. Well, we're back in that market right now. We're in a strong labor market right now. Even with these layoffs right now, the numbers that are coming in for unemployment, they're falling short every time. Oh, it's a recession. Yeah, right. How? The numbers are falling short. The tech people are actually going and getting jobs as soon as they leave one tech company. This is a great thing for tech. They needed to shake it up. We should be having flying cars right now. Talking about some tech. They want to develop software. They need to develop everything. So we're seeing a shake around, a shakedown in tech. Great. And once again, these were companies that were sitting on your hard investment dollars in your 401ks for these companies to sit on 200 billion, 300 billion, half a billion, half a trillion, type deal. Netflix is worth more money than you almost got for a traditional American company, some car company or something, some clothing company. Now, granted, they're international, but what recession? These companies have made quite a bit of adjustments. They made quite a bit of adjustments in they're moving forward strategic planning on how they're going to get these companies profitable again. They got a little lax. There was a lot of money, a lot of cheap money, one, and then they just had a lot of cheap money in the market, ladies and gentlemen. You got to remember, interest rates were very flat for 5 plus years. Interest rates were flat, and when money's cheap, these tech companies just sat on that money. So you're going to see the stock market for sure lose a lot of value because the tech companies, they had a lot of value in the stock market. But that doesn't mean that the economy is not strong. So we have to clarify that for the audience. It's definitely that. It's definitely, we could say, looking at it from the outside looking in, people that have 9 to 5 jobs are picking up gig jobs. The economy in that respect is somewhat resilient, that Americans have got accustomed to having the luxuries now, and you're starting to see them continuously. Okay, you say, well, how do you know they're into the luxuries? Trust Christian and Vault. Because Bernard Arnault, one of the largest wealthy public families in the world, they've reported that they had the strongest years. When you look at luxury across the board, Lamborghini, Ferrari, when you look at Gucci, when you look at these LVMHs, when you look at these names have reported that they had record 2022s. They had record years in sales. And those are things, those are indicators, because one, they're not all American companies. One, they're definitely not all American companies, but it shows you where the marketplace has shifted, whether it's marketing dollars or not. But you can see where money has gone. It's not save the planet EV cars, and you can see these companies are getting slightly competitive actually when you start seeing these older car company, whether it's a Lamborghini, whether it's a Ferrari, whether you see even a Ford, these companies are creating electric vehicles, and so now they're going to compete, and they have, they're going to maintain their customer base, because who doesn't want to get rid of their Ford because it's been in their family for generations? They're just going to go get an electric Ford now. So as you can see, there has been a shift, but once again, the shift is actually tended to towards more luxury right now. So you can go look at the numbers on those companies and say, "Oh wow, those companies actually had a record 2022. They've already said it." So where are we now? You think they're not gonna have a record 23? You think this is gonna be the fall off year? And even if it wasn't the fall off year, if they fell slightly lower than they did last year, they still had record setting numbers for luxury goods in the world. You got to think about how many people are paying attention to the war right now. One of the bigger wars that we've seen, because they wanted to publicize it. How many Americans really care? How many Americans actually are interested in that, or they're focused on, is the American economy about to go into a recession because of the GDP numbers? Most Americans are just trying to make a living, trying to work and make money for their family and provide, and not let the economy fall into a recession. They're living in fear, but they're working. That's what the Fed is saying. And they don't like it. They'd rather for people to be on welfare, be dependent on the government slightly. Well, why didn't you file for unemployment? We don't see the unemployment numbers going. Exactly. Unemployment should correlate with the fact that GDP numbers are going to go down. Because when people aren't working, they're not shopping. But we've also seen record setting luxury good numbers. So clearly, the American economy, the consumer base, is resilient. Maybe not forever, but right now they are because they're working. Their economy has been open. They almost had a 6 month head start. That alone will keep them out of recession almost. We could say that. Because who's the if all the economies get open again, do we not go back to 2018, 2019 type robust growth? Do we not look at that and say, we why would we not get back to that? This is why we won't get back to that if there is a recession. It's because the semiconductor environment, these tech companies, they're just not moving fast enough. You don't want to say it. You think you got a new cell phone every year. You think you got a new computer every year. You think you got a new TV or a monitor every year. But most people don't. The technology, it costs quite a bit. You think about a new laptop for Apple. No one thinks about going to get a quality new laptop from Apple for less than $1,000. The technology for their cell phones over $1,000. You look at other companies, their phones cost over $800 still. The cost of technology, when is it going to come down in correlation with the fact that it's supposed to get cheaper and more efficient? That the cell phone got smaller, then it got bigger again, and then it costs now. Well, you think about, well, where's the cost being mitigated? Where's the cost being lowered on a cell phone? Is it the phone? Oh, well, we'll add it into your plan. That's what these companies got smart. They added it into the plan. They added it into the cell phone plan. That's where they had to get smart, because why would you spend $1,000 every year just for a cell phone? Some people do not spend that much money on a cell phone every year. Why? Because what really changed from last year to this year? So we see the purchases of cell phones not necessarily have slowed or fell off a cliff, but they've kind of been abated a little bit in the respect of just looking at what. Think about it. How often do you get a cell phone? Just ask yourself that. How often do you get a new cell phone? How often do you get a new laptop? Well, these companies, they're supposed to be able to supply these things rather quickly. They're supposed to be able to supply them at a lower cost than sitting here saying, "Oh yeah, you got to spend $1,000 for a laptop." It's like, well, is the cost of the laptop ever going to go down? I mean, this is the honest truth. You could say that the dollar's losing value, and that's how you know these tech companies, they're always going to be in your pocket, and they're always going to get rich, and they're always going to stay rich, because they understand that. Even when their cell phone cost $1,000, they said, okay, we got to allow the companies that distribute our cell phone, they just put it into their cell phone plans. Yes, the American CEOs are smart. They're savvy. So why would their numbers be lower than normal this year? They're getting efficient. They're supposed to be efficient. They cut the fat, and now we're looking for efficiency. We need to get back. We need to get more. And whether you guys know it or not, from the Vault's opinion, we think that the market actually is probably in one of the most efficient positions it's been market structure wise in the last 3 years. Outside of the market being shut down in 2020, when we saw the market literally shut down, when we saw the market shut down for the meme stocks, the market shut down. They had a legal court case about that. The market shut down for that one company alone, because the company was supposed to be $1 billion company. See how they shut down the market for these $1 billion companies? Because that's how big they are, and that's how much they're stealing money and wiping the everyday common man out of his wealth. Oh man, I'm gonna invest in this meme stock because we're gonna go against the grain, and we're gonna try to bet against the banks. And then guess what? The everyday average man that had his money in crypto, that had it on an exchange, guess what? They just got wiped out. Oh, I had $10,000 on the exchange, wiped out. I had $20,000 on the exchange, I got wiped out. I had $50,000 on the exchange, I got wiped out. So this is what the people gonna say over there. Well, you should have had it in a cold wallet. You should have had it in a hard wallet. Yeah, right. They didn't, because we thought that these companies were supposed to be educating their consumer base. Remember what these companies, whether you all know it or not, as the common man, the Robin Hoods of the world, these brokers over the internet, this is what they say. We're actually giving market research to the everyday man. But then there's also been court cases that not necessarily that they've lost, but it's been proven that they're selling the data to the banks and the hedge funds, the brokers. It's been shown legally they're selling your positions. They're $1 billion company though. And yes, we just saw crypto exchanges go under. They were $1 billion companies. They just went under. Just like that. How does that make you feel as an American knowing you work hard, you were brought up, you had a solid education, and then you got somebody in the economy that's able to go create $1 billion Ponzi scheme? They just stole the everyday man's money. It's not. Look, let them steal the bank's money, whether you know it or not. That's just the facts. Sure, you stole half a billion from the banks. Sure, you stole $1 billion from the banks. But they didn't just steal $1 billion from the banks. They stole billions of dollars from everyday Joes, everyday common man. When you talk about a recession, there is a class action lawsuit should be filed against the crypto companies that literally it's like you just stole money. It's legally stealing. That's what it's called. Oh, we're gonna go to court. But guess what? How do you go to court for a company that just filed bankruptcy? Well, there's different types of bankruptcies. And guess what? If we got a bankruptcy proceeding in before the feds came along and tried to do an investigation, it looks a little different, right? Right. We got to file bankruptcy before the feds come in the door, right? Right. But they stole $1 billion of your Christmas money. They stole $1 billion of your Valentine's Day money. They stole billions of dollars of your travel money. You say, oh man, how does that work? $500 here, $300 there, $1,000 there, $10,000 that somebody didn't put in a cold wallet. Wow, add it up. $2 billion, $3 billion we just stole from the common man, the everyday Joe and Jane. If you say there's a recession, let's say that the economy, but not the market. Why? Because the market knows that the market likes money. The market likes companies that are growing. Once again, luxury goods had a all-time high. Luxury goods. Well, if the middle class can't afford luxury goods, they're gonna just go do middle class things. You think the banks don't know that? You think people that have money don't know that? We're out of COVID now. Probably people are gonna start traveling again. It's just we could see a slight increase in that, right? We could see a slight increase in that, but they don't want to talk about that. We're going to talk about the tech companies that charge you $1,000 for a cell phone that you don't buy every year. And they were literally selling into a market, quote unquote, China, that literally their market was shut down. That's a billion customers that you didn't have access to. They got access to those people again now. The market's open. Those people are working again. They're buying products again. They actually have pent up demand. So they're going to add to maybe the second largest luxury good purchase year ever in history in 2023. We can predict that at the vault. Why? Because Chinese customers are definitely going to be buying a lot of luxury goods now because they can import more stuff because they're actually going to be buying more because their market's open again. They're working, they got savings, they have pent up savings. They're going to look like what America looked like for 2021, 2022. They were buying a lot of stuff. Americans have been buying stuff for almost 2 years now, whether that was off the money from the government or the fact that they had savings. They've addressed this issue. There was a lot of pent up savings in the middle class. There was a lot of pent up savings in the upper middle class. And so, as you can see, what recession? Okay, yeah, there was excess savings. You hear the term. We don't need to see excess savings. We just need to see consistent go back to flat numbers. 2018, 2019, when they thought the market was great, when they thought the market was great going into 2020, when they thought the market was great, the market was great. It was a great market. And can we see the market not necessarily readjust and go back on some super bull, but can we see the market, even your average apparel companies? This is going to be a sleeper. You might see quite a few. This is a new term they have in the marketplace now. If you're an investor out there, I'm sure some of you all can. If you're familiar with this term, type yes into the chat. It's called athleisure. Athleisure. So it's like athletic leisure clothes. These companies, like a Lululemon, maybe even still a Nike, hey, we don't want to say they're going to do well, but if Nike's not an indication that the economy might go bad, it's like, well, yeah, if they're still buying Nike products, if their people are still buying these companies' products in a strong manner where their numbers aren't going down, they're just flat. We don't see them just being flat. We actually see them, if they're going to be flat, they're going to be above 2017, 2019. These companies are looking to make money. Yeah, they're going to do deep discounts. They've already been doing that for 6 months now. These companies have been doing deep discounts. And they're going to continue doing deep discounts. And we're going to see that the states, you can look at yourself in the mirror and say, hey, is it going to be a recession for you? No, it's not. We've officially almost got out of a bear. Whether they want to keep saying it's a bear rally, whether you look at it or not, I mean, you got to just pay attention to the numbers, ladies and gentlemen. Just stay paying attention to the numbers. What are the numbers saying? The numbers are saying that the bottom has already been met. We're looking for sustainability. What is the new regime? What does the new tech regime look like? What does the new energy regime look like? What does the new apparel regime look like? What are these new, what economy is the new regime? Right now there's a war going on, so there are going to be some shifts in, oil regimes for a quick second. We're going to see some shifts in who's in control, whether it's companies or countries that are in control of specific industries, whether it's energy, whether it's tech, whether it's retail. We're going to see some regime changes. I mean, when you see a company like a Netflix saying, hey, look, we're not doing password sharing, they're trying to step up their leadership in a space that says we allow people to do that. It's interesting though. It's not like you would lose customers, but they've lost customers, and then now we're seeing if they're going to continue to have growth. This is a company that lost half of its market value in 1 year. 1 year, ladies and gentlemen. A company, the company was worth $150 billion. Yeah, now it was less than 70 at one point in the past year. And then they're back up again. They feel like they've cleaned out the cobwebs in their racket. Well, we'll see in 2023. What recession? Trust Christian involved. Christian at trustchristian.com. Feel free to reach out. Once again, that's Christian at trustchristian.com. It's interesting to see, ladies and gentlemen, whether y'all know it or not. It is very interesting to see. And we just going to keep it moving because that's where we are right now. We are at the point where you don't really see the media going to continue with this story. And when the Fed puts out some information this week, and once we continue to see strong labor numbers, what do you say? When you see strong labor numbers, you got to be able to say that companies aren't going to have people buying stuff. And right now, that's not the case. So they want to question, which is the companies raising the prices on things because the money was cheap. The money's been cheap for years now. And so, okay, we're going to see. If all you got to do is look at your groceries. When your groceries, the price goes down. When you look at gas, that's another thing. You all want to say, oh, the gas price went down. Ladies and gentlemen, we can tell y'all right here from the Vault's perspective right now. Y'all can go ahead and be ready. This might be a year where oil goes back over $100. So y'all need to be thinking about that. It's going to be a strong year for certain things, and people are going to be traveling again. So the demand is going to be high, and oil prices could definitely reach $100. This is not financial advice or legal advice, but we definitely letting y'all know y'all can be ready for that play. It's definitely possible. It maybe not probable, but you have to look into it. Why? Because right now you think about it. This is supposed to be the slowest time where people aren't traveling in the winter, right? So what do you think is going to happen in the spring? What do you think is going to happen in the summer? In the northern hemispheres, where people are traveling like crazy post-pandemic, with the freest moment since they've had since February of 2020. The freest moment where the markets are going to be open. We're going to see how it plays out. Look forward to hearing from you. Trustee Training, Christian at TrustChristian.com. Once again, that's Christian at TrustChristian.com. We definitely look forward to trustees get going. We definitely have quite a few trustees going right now, so we definitely going to be working on our next workshop here coming up. We'll get that going out. It'll most likely be in April, but we've already kind of looked at it for our trustees that are in the program right now. But this is one of those things. What recession? It's crazy, man, how they got the market fooled with this fear sentiment. They've been playing it, and now they're gonna get to a point where, oh, it could be a soft landing. The Fed's gonna pump the brakes. Well, if the Fed's pumping the brakes, wouldn't that mean that they did their job? The Fed did do their job. They slowed it down. It's gonna moderate. They're gonna use the entire year to not put pain that they could inflict all at one point right now. All at one point. So if they don't inflict the pain on this next meeting that they have, which could be a 50 basis point hike, at the vote we would like to see a 50 point basis hike. But what they're going to most likely do is a minimum 25 basis point hike, and that means your money's going to lose value. But that also means that the cost of goods, you may see that lose value. So that means you can go buy some stuff at a little bit cheaper rate because these companies now are being taxed on their money again, and that's what we see. You know, but it's not like you're gonna stop buying it. It's just the cost went down a little bit, and you see that, and you may not know that. Yeah, the your money is a little bit cheaper now. Okay, and that's how people want to play it. They rather see a certain number, and they don't care about how much their money costs. So, well, we don't see it. We just don't see it. You have to see something where there's a reason why there's a hemorrhage of cash leaving the economy. There's no hemorrhage of cash leaving the economy right now. It'd be different if they were at war. They're not. The states are trying to play neutral and supply weapons. That's how they play it. Well, we're seeing that. We're seeing that. So, what recession? Where is it? You don't want to know that the more companies don't report the negative, because the companies have to report, not the street. Wall Street has to report. These companies have to report. If you look at even Tesla's earnings, Tesla dang near said in the fourth quarter, which will consider to be the worst fourth quarter in years. What are we talking about here? They didn't report negative. They didn't say, oh, it's the end of the world. Their stock is counterintuitive to the market. So when you see it, what's going on here? Are they okay? It looks like they're okay. Looks like it doesn't look like they're going down the drain. Why? Because they've reported solid numbers. They've also cut the prices of their cars. Usually when you cut the price of things, people buy it more, right? Right. They're not dumb. So they're going to continue to report solid numbers. Maybe not extraordinary, but solid. Why? Because they just cut the price of the car that they're selling people on. It's going to cost them more. I mean, cost them less in maintenance. So we're seeing a very interesting shift in the economy. But when we talk about the market, We don't see a recession in the market, and even if it is, it's maybe what people call revenue, not necessarily earnings. We see revenue losses, but even when you see those misses, and you keep seeing misses, and you keep seeing misses, ladies and gentlemen, there are quite a few companies that have been hitting that have been missing their earnings and their revenue goals for years, and they have billions of dollars. So that's based off of expectations. Guess what? Most companies have already lowered their expectations for 2023. Well, when you lower your expectations and then you meet your expectations throughout the year, you don't lose money. They don't lose money. When you meet your expectation, they lowered their guidance. They thought they were going to go into the year. They didn't know if it was going to be crazy. They didn't know what. Okay, we didn't know if it's going to be a recession. We don't know. Right. They lowered their expectations because if there is a recession, they lowered their expectations. So they don't look like complete fools. So they lowered their expectations. They did lower their expectations. They did that last year. Companies now are just going to walk into a year where, hey, we already called these numbers. We hit these numbers. They're going to get money. That's why you see the market holding strong right now because we're they're already saying, okay, we're not hitting extraordinary numbers. We're not hitting 2021 numbers. We're not hitting, crazy numbers, because of quantitative easing or anything. We're going to be flat. Flat. If it's a flat, that means people still have jobs and they're spending money. We look forward to hearing from you all. Christian at trustchristian.com. Once again, it's Christian at trustchristian.com for trustee training and consultation. Peace and joy.